Bitcoin and Ethereum are both dropping at the moment, seeing a dip. Is this a sign that both of these assets and the crypto market in general have topped? Or is this a healthy correction and an opportunity to buy the dip? We're going to take a look at both of those charts as well as all the news driving markets right now. Let's go. What's up, everybody? I'm Scott Melker, also known as the Wolf of All Streets. Before we get started, as I ask you on every video ad nauseum, please subscribe to the channel and go ahead and smash, tap, hit, poke that like button right down below, that little thumbs up. Go ahead and hit that. Now, as I mentioned, we're seeing a pretty predictable dip in Bitcoin at the moment. The move did look exhausted, and as I've mentioned countless times, we've had bearish divergence with overbought RSI on a number of time frames, all the way up to the daily, which usually means that we get a bit of retracement and at least a local top. But we'll dig into the charts right now, take a look at that and everything else that we can find. First, we have the weekly chart here on Bitcoin. As you can see, we had a strong weekly close last week above what I've talked about as the key level of 42,000. That whole area was strong resistance, even with the 38.2% retracement level there on the Fibonacci. So now we've pushed through both those with a strong close above. I've been looking for a drop down to the 40 to 42,000 region, maybe a wick down even a bit below. When you have a key resistance area, you want to see it retested as support. It's actually bullish to see it hold as support. So as much as it sucks to see price drop 10% to do it, that's what you look for and is usually a bullish signal that price is going to continue. So for now, I don't see any real signals that price has topped in general. I think that we're looking to buy lower on the dip if we get the opportunity. To me, this is the chance to long your longest longs that are going to be long for a long time if we get a significant dip here. We've just entered effectively a new bull market, so I'd be very surprised to see this actually be the top. Let's take a look at the daily chart here. As you can see, the talk has been the 200 MA, but that is currently failing. This candle has not closed, so do not panic yet. And even if it does close below, do not panic. It's just one line on the chart, right? So what I've been looking at here is that 42 level. If you zoom out, you can see that this was the top of that move from 20,000. Took almost a month to break above it. And now we've been below it for a couple months, right? So we would want to see that retested as support. So something that comes down here and heads up is not a problem to me. From a demand perspective, this area has also sort of been untapped, except for this wick here. So if we do drop lower, maybe we get that wick down into here and a close above the 42,000 area. Nothing here looks particularly bearish to me, to be quite honest. This just looks like we're going to get a healthy retracement. We just did it here. Nothing goes up forever. You got to go up, consolidate, go up, consolidate. Volume is non-existent on this selling for now. I don't see any reason to be panicked at all. As you can see on the 4-hour chart, we did just get above this range after trading in it for months. When you exit a range to the upside, make a higher high, that should be a signal of continuation to the upside, and that all of this was accumulation, which you can see on any Wyckoff schematic. Now, talking about that bearish divergence I was looking at, you can see it right here. This is the daily chart. Higher highs, we had one here and then there. Higher highs in price, lower highs in RSI with RSI overbought. Now, RSI can go very far overbought and can make these bear divs over and over again. But then you do get these corrections, right? You get this correction here, bear div, correction, bear div, correction, right? So nothing astounding here. And actually, we right now would have a very small hidden bullish divergence if price closes up here and heads up, but that would require a lower low in RSI, higher low in price, and for RSI to turn up definitively. But no surprise here. We went to oversold. Now we're overbought. Now we generally get a bit of retracement to head up. You can see that this bearish divergence, 12-hour, very clear lower highs on RSI, higher highs on price. 6 hours, sort of the same pattern. 4-hour, as you can see, even had another little bearish divergence here, but with a higher low on price. If that turns, we would get some hidden bullish divergence here and could potentially head up. So no surprises here that we would see some healthy retracement, but like I said, it will be, in my mind, hopefully just that, healthy retracement opportunity for people who missed to buy the dip. And this is something I've been saying for days. Quick look at the ETH Bitcoin chart. The ETH looks great against Bitcoin here, consolidating above the EQ, the equilibrium of this range. This is a range after a massive move up, Once you flip that EQ to support, listen, nothing's guaranteed in technical analysis. You should be targeting the top, which would be about 0.082 on the Ethereum Bitcoin pair. This also potentially sort of starting to look a bit like a bull pennant of sorts, right? We can draw something like this. As I talk about often, pennants often become flags. So if it becomes a bull flag, you'd look for something like this. That support of the pennant would fail. You'd get a bounce here and then head up. But right now, this looks like some form of bullish consolidation after move up above support. That's a good thing. Ethereum on USD, we had this double bottom that I've discussed a few times, right? The target based on the depth. This was the neckline and confirmation. Well, it basically just overshot that target slightly. And we can see, I keep talking about this, and even yesterday it looked like it was going to break. 31.63. I don't know what kind of magic wall here. This is some Game of Thrones wall in the north type action that looks like it's going to require a humongous giant to break through, or maybe even an ice dragon. Right? But look at this. 1, 2, 3, 4, 5, 6 candles have either opened or closed exactly on that line. So it does look like there's strong supply there. Major selling in this area. 1, 2, 3, 4, 5, 6. Pretty astounding. So we'll see where this candle closes. The daily is not closed yet, obviously, but maybe we get a bit of retracement before a move up. Again, does not look that scary to me. It's on low volume, but I want to see a candle close really above 31.63 if this heads up before I'm convinced. Maybe look for something and then a bounce there of support. Now let's dive into the news that's driving markets. Now, we have some analysis here from CoinDesk. Ether holds long-term support ahead of all-time high. The uptrend for Ether is strengthening after the cryptocurrency avoided a breakdown below a crucial support threshold. That crucial support threshold that they're looking at here is the 40-week MA, which is a line I have literally never heard of in my life. Why not the 37.2 MA or the 14.97 EMA on the 9-hour chart? I'm not saying that the 40-week MA is not important. It obviously is to this analyst, but this points to the fact that everyone has their own strategy of technical analysis. Everyone has that line that is so important to them, that certain MA or that certain indicator, and none of it matters to anyone but yourself. You trade on what you know, and that is how you make your decisions and your plan. The 40 MA on the weekly, I've literally never heard of it, but clearly to some people is important. But I have to refute this article. I don't think that this is a long-term support that's been important. And even when you look at it here, it's cut through price quite a few times. And of course, almost every MA is below price since March 2020 and the epic pump. We do have that touch here that they showed, but the 40 MA, generally we look at the 50, the 100, the 200 is the ones that traders classically look at. Bitcoin shows signs of exhaustion, up, rally falters before next leg up. Sources, sauces. Markets need to digest some overbought levels before attempting 50-55 resistance. Zero caps, Chappell said. I don't disagree. That sort of leans to what I was saying before. He makes a great point here. The derivatives markets are long. Perpetual funding rates are positive for shorts, indicating short-term positive interest from retail. Right? That generally means when shorts are getting paid that most people are long and someone takes advantage of that, squeezes those longs, price drops a bit, and then we can continue up. We'll see what happens, but I tend to agree that maybe we have had a little local top, get a bit of retracement, and then price can head back up. This story is amazing. Wallet recovery service helps man regain access to 10 million Doge. This retired truck driver was locked out of 10 million Doge worth 3 million. Then a wallet recovery service came to the rescue and reunited him with a fortune. That's a company called Keychain X doing God's work out here. This guy bought the Doge in 2015 for $1,500 and went up 2,000X to be worth $3 million. Now, the pin to his Android wallet was 12 digits long. They thought this was basically impossible, one of the most complex things to hack and break into, but they managed to do it through a range of experiments with important numbers to him, and then ultimately with the owner's hints to the wallet. Unbelievable. This guy absolutely owes them a massive debt of gratitude. $1,500 to $3 million, which he thought was lost. What a story. Poly Network hacker says exploit was just for fun. The Poly Network hacker denies evil intent and says they wanted to teach the project a lesson. Holy moly, $611 million lesson, and now they've returned over $200 million of the funds. I have not been following it too closely, but what I've seen is absolute comedy. This guy basically hacked Polly or this group or this person had no idea what to do with the funds, got basically doxxed because they sent it to an exchange that had their information. Then they had people basically coming and begging them for money and asking them how to launder. This guy asking people how he should launder the money after he hacked it. Basically, they hacked it, had no idea what they were going to do with the funds after, were complete bumbling idiots, and now are sending the money back saying it was a joke. What a saga. But the important note here, you can only invest a small amount of your capital in protocols like this, no matter how bullish you are on them. Bitcoin's safe, Ethereum's safe. When you go further down the risk curve, the opportunity for hacks and exploits becomes massive. So the upside potential of a coin or opportunity is matched by the downside risk. And finally, Lionel Messi's Paris Saint-Germain transfer included crypto fan tokens. He's getting PSG tokens. He probably doesn't even know this, to be honest, or care, but really cool. This is on Chile's Socios. What is more astounding is that there was over $1 billion in volume on their fan token before this was announced. So obviously somebody was front running the news and knew exactly what was going on, but anything like this is a great step towards mainstream adoption. Now, guys, that is it for today. I have some epic podcasts coming out. Today's with Rand Nooner was absolutely great. You guys should check that out. And I will, of course, be back tomorrow with my normal 2 p.m. live stream. I will be joined by Nebraskan Gooner, my friend. This is going to be epic. You guys do not want to miss what he has to say. As usual, please check out my newsletter and everything else I have going on in the description down below. Now, in the famous words of Special Ed, this time I'm going to leave you. I'm not a trader. If what you got is greater, I'll trade, but maybe later because my waiter made potato and alligator souffle. I got it made. Peace.